Hello everyone and welcome to another video. If you're new to the channel, my name is Meydan. I'm a fintech entrepreneur in the financial markets, and I'm also the developer of the time and price methodology of trading. So if you're new to the channel, go through some videos and you'll see exactly what we're talking about. And this video is about a case study. So I've done a lot of videos on how time and price can work really well when you're trading, and how it can always help us to overcome, problems and mistakes. And in fact, if you're trading with time and price together, trading becomes much more forgiving, which is what we like. And this is an example of exactly that. Now, let's take a look at gold and get me out of the way here and switch on to the gold chart here. Now with gold, yesterday, was a swing day, right? So gold, we had a swing day yesterday. Let's take a look at this. Okay, so this is the 5th to the 9th May. As you know, I've posted this on the 20th of April. So by the time it was 20th of April, we already knew, all the swing days and the hours. And gold, swing day was Monday and Thursday. All right, so yesterday I was saying we need to sell, right, because we're at the tops. And this is your Monday. Remember last week we had Friday swing day, Monday swing day, market was down, so we're looking to go up. So then we've got Monday going up, Thursday's a swing day, so we want to sell from the highs to go down. Okay, so it's all good, nice and honky-dory. And me, okay, decided to go long. Okay, but I had a good reason. It's a good reason. I don't know what the good reasons, but the good reason was timing. Okay, so the market did an impulse wave down, and remember what we do on an impulse wave is once the market's doing an impulse wave, we wait for the retracement and we enter in the direction of the impulse wave at the right hour. And that's exactly what I should have been doing, and that's also what I said to do in the video. Now, but it was my lunchtime here, and I was looking at the screen. I said to myself, well, we've got a gap here, and if we're going to sell it, we'd like to fill the gap in. So I thought to myself, why don't I go long until we close the gap, and then I can sell it off later, right? So that's what I did. So I opened two positions after this here, after this trade hour here. Okay, now remember yesterday, in yesterday's video, which you can see on YouTube today actually, I said, guys, we've got 12.45 here, which is nice, okay, but the real turnaround should come after 1:45. Okay, so I said, do wait for the 12.45 1:45 zone, and not this one, despite the fact that that is in the trading hour zone. Okay, so those are the hours we're looking out for. So I did wait, and those are the two trades there. Okay, and then on that 12.45 here on this bar, I did enter a trade, and then the market started turning around after 1:45, and then it went up. They all had, because I was measuring it, I measured the targets as well. They all had stop losses and targets. Obviously that's why they got hit at the targets, right? So once they got hit at the take profit targets, they just automatically came closed. I didn't wait for that, but once the trades were gone anyway, they were taken with profit. I was like, okay, that's fair enough. Now the problem with my time zone is that's 4:30 right there. So in this time zone, I'm sometimes not home. More often than not, I'm not home because I got to pick up Al from school. So it was a bit of a drama here, and then the market turned around, and then obviously it's a bit of a bad trading hour for me because that's 5:45, so I'm at home with the family and stuff, and then the market crashed down. But this happened exactly as I said it should happen. So what am I trying to say here? Why is this a bad case study? Because I did make a mistake. I didn't go with the impulse way, which is what I wanted to do. And I wanted to come to those profit levels which we were expecting on the PST level. So all that was done exactly according to what we said would happen, and you see how the market fell right into the trading hour at 8:30 here. So everything just like worked out well. The lesson to learn from here is, if you're trading with time and price and you know how to do technical analysis, even if you make a mistake but you're trading on the hours, your trading is much more forgiving. Because here, as you can see, because we need the trade hours where the market was highly likely to turn around, and I knew that we should have some retracement. That's the way to go. We should have a bit of a retracement to go forward further down. So I entered that trade, but this was not, that wasn't the objective. The objective was yesterday to take this trade. Okay, so that's a boo-boo on me. But at the end of the day, if you guys took it in New York or Asia, because I know some of you guys are trading this in the Asia session, although it's late evening and early hours of the morning, like it's like late for you guys, but that's how it is. So that's a bit of a case study for us. And the stop loss was like tight. I didn't leave it too far out, obviously, because the market's going down. But at the end of the day, that was a mistake. Okay, so that I should have taken the sell trade there. But like I said, it's picking up Al. It's like early evening. You know what I mean? It's like family time kind of thing, and it's not always easy to focus on those hours. But this was a classic setup that we've learned in the training program as well. Okay, so following the technical analysis and following the timing together, you like measuring everything together, and when they come together, it's just bingo trading. And also with the euro dollar too as well. Yesterday it was just same thing. Okay, market comes down, impulse, we're going sideways. You see how it's consolidating. At the trading hours, we are low. At the trading hours, we are high and break down right into the target zone. So we're now right in the target zone there as well. So it's just all pretty much, as you can see, target zone. And on the weekly PST, we already had this level. Remember, we had this price in the beginning of the week. On Monday, we already knew that we had a 1205 target. So nothing new, and the target is done. And also, let's take a look with the euro dollar. Because we've got Thursday, Friday swing day, right? So it actually matched nicely, because euro dollar, Thursday, Friday. And as you can see on the daily there, I did say we should be pushing down on Thursday, and I did say before, in fact in the beginning of the week when we were going long, I did say, guys, we're going to break this level. This is a highly likely going to break kind of level, and this is why yesterday I was okay to short it. It was just following through, and Thursday being a swing day, just coming down. So hope you guys made some money on there, but on both of those, gold and euro dollar, you should be in all good. SP 500, we didn't have a place because the market was not where we wanted to sell. If it is not where we want to trade, we're not trading. All right, so I hope that helps. Short little video, case study, something to learn from every day. All the best. Have a good weekend.